Good morning, ladies and gentlemen. Welcome to the 8th session of FNA's CBDC broadcast. We're happy you're joining us today. I'm Carlos Leon, and I'm your host in this series of CBDC broadcasts. We will give the audience a few minutes to log in and join. Okay, while the people join, I'm going to make the housekeeping. So the CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDCs today. You can use the Q&A widget below to ask questions. Speakers will aim to answer as many as they can during the 10 minutes Q&A part. Please do not forget that Chatham rules apply. So let's start with a little bit about what FNA does. FNA is a leader in advanced network analytics and simulation. FNA software used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events, and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures, such as we have here in the logos on your right. Also, we work on the CBDC environment with a CBDC simulation solution. Our solution enables users to rapidly test, model, and simulate the economic and financial stability implications of introducing a CBDC or other forms of retail digital currency. The main benefits of our solution are that they will allow the user to test different design choices to understand CBDC adoption outcomes related to disintermediation, financial inclusion, and payment behavior. It will allow the users to simulate shocks and stresses into the CBDC rolled out. And obviously, the main outcome is to improve decision-making among the many stakeholders that are related to CBDC environment. So just to start, I'm going to present today speakers. We have two speakers, Larissa de Lima and Erika Salinas. Good morning or good afternoon to both of you, depending on the side of the world you are. First, Larissa. Larissa is Senior Fellow, Future of Money Initiative at Oliver Wyman Forum. Larissa leads the forum's research on central bank digital currencies and their impact on the future of financial systems. She previously managed the forum's Future of Data initiative, where she led research on attitudes towards sharing data during the pandemic and how value and profit is created and shared across data ecosystems. Larissa has a master in public policy from the Harvard Kennedy School and an MBA from Harvard Business School. While pursuing her Bachelor of Arts in Computer Science, she conducted research in artificial intelligence and computational neuroscience. Thank you, Larissa, for joining us today. Now, Erika. Erika is Global Technical Leader, Blockchain at Amazon. Erika serves to advise and accelerate Web3 projects across the enterprise to meet emerging customer needs. Prior to current role, she led the Digital Assets Initiative within the worldwide public sector at AWS, part of the global team that supports central banks and international financial institutions as they seek to achieve their mandates amid rapidly changing technology. Prior to joining Amazon, Erika worked as an enterprise product manager for a blockchain startup, spent time researching the intersection of technology and microfinance, in particular, the impact of mobile money on financial inclusion. Erika has a master in finance and development economics from American University and a bachelor and master's in electrical engineering from MIT. Erika, good morning. Thank you for being here. So let's go to the next slide. So today, our subject is aligning technology with policy, a look at the recent Oliver Wyman Forum and Amazon Web Services report. So just to introduce a little bit the topic, I would like to say that in the previous sessions of the CBDC broadcast, we have focused on the many motivations for rolling out a CBDC, from achieving higher financial inclusion and higher transactional efficiency to preserving monetary sovereignty by compensating the declining use of cash and by countering the entrance of new private forms of digital currencies. But today we're going to have like a different approach to the CBDC issue. In this 8th session, we're going to talk to 2 guest speakers, which I already presented, and we will focus on a joint report, which is called Retail Central Bank Digital Currency, From Vision to Design, which sets a framework to support policymakers in evaluating the interdependencies between policy and technological changes. And this is very interesting because when you read this report, at the end, you get a very nice view of how the successful rollout of a CBDC depends on how the motivations, design principles, and design decisions are properly aligned and articulated. And that's the reason why we have Larissa and Erica today here, because this report is really interesting. It gives I mean, if you read the entire report, and I know that Larissa and Erica are here to give us a brief summary and to give us the flavor of the report, but they would like us to read it in full. And after you read it, you will realize that their work has been great, and it gives the reader a nice way to understand why the design principles and the decisions should be really articulated. So with no further delay, Larissa and Erica, good morning, good afternoon. Thank you for being here with us.
Good morning.
Good morning. Thank you for having us.
Is there anything you want to say before we start? I mean, like something you want to introduce yourself any further, or is my introduction complete enough?
I think you covered it for me.
Yes, that was quite comprehensive. We can get started with questions.
Good, thank you. So let's start with an icebreaker question. Why did you do this paper, and why you two? Why you two together?
Sure, I'll start. So at AWS, we always start with the customer, right? And we want to work backwards from what they're trying to achieve. So as we were working with central banks across the globe, we knew as we were approaching the subject of CBDC that their goal and the design would have to stem from their policy goals. And while our team has expertise in that area, we really wanted to partner with an organization who are the policy experts. And so, of course, that led us to Oliver Wyman Forum, who we already had a really strong partner relationship with. We also noticed that there was a real gap in the literature where there was 2 separate research tracks, right? People were talking about policy, people were talking about technology, and there really seemed to be happening in silos. They weren't bringing those together. And so we thought it was a really great opportunity to bridge that gap by bringing the technical expertise and the policy expertise together, and really add to the discussion in a meaningful way. Plus, I'd just like to add that it was really fun to work with Larissa as well as the rest of our author team. And I think both sides really learned a lot about the other domain. And so it was just a really enjoyable experience. So I hope Larissa agrees. What do you think?
Very much so. No, it was super interesting to be ourselves a mini experiment of what it means to bring together a technology and a policy track. So learned tremendously from the AWS team and from Erica. And I think the strength of the paper really depends on this really strong collaboration that we developed.
Mm-hmm.
That's great. Thank you very much. So I would like, I know you have attended several CBDC broadcasts, so you know that I love to wrap up like the main thing of every answer that you will give us. So for me, this is the best way to wrap up just the motivation for you to working together is to fill the gap between policy and tech. And that's, I think, the main issue or the main objective of, and the main achievement of this joint work that you have developed together. So let's go to the second question. In your joint document, you state that in retail CBDC discussion, there are some design principles that most likely will impact design choices and vice versa. Can you mention which are those design principles?
Yes, I'd be happy to. But before I get into the design principles, I want to first explain how they fit into our framework. So the picture you have on your screens is the framework in our paper, but I'm actually going to ask for us to move on to the next slide because it presents a little bit, it's more simple and easier to describe. So we wanted to create a simplifying framework to help policymakers decide on whether to launch a CBDC, and if so, what were the key decisions to make earlier on in the process. So the main elements are, first, it's important to set a clear vision and to detail that vision with design principles. Next, those principles then feed into the basis of what we're articulating as key policy trade-offs, because trade-offs are inevitable anytime you think about launching a solution. And those trade-offs actually then bound step number 3, which is about defining the technology architecture and thinking about roles and responsibilities. And then finally, CBDC systems are highly complex in the way that they will interact with the market. So we wanted to also detail and give some forethought onto how competitive dynamics would play out. And then because this is going to be a multi-year complex undertaking, we also have recommendations for program design. So that's, in a nutshell, is our framework for the paper and how we hope to articulate how policymakers should be thinking about designing their CBDC programs. So now on the next slide, we have the design principles themselves. And what you'll note is that we're not defining the design principles as much as articulating a few areas where those principles need to be defined, as those are going to be what feed into the key policy trade-offs. And another caveat, and sorry, we're going to have a lot of caveats, is that this is not meant to be a comprehensive list of every single decision and every single design principle. Again, it's mostly about feeding into the policy trade-offs that are then going to complement to technology choices. So to talk a little bit more about those areas. So first, you have the role of the central bank. Managing a CBDC system is highly complex. Will the central bank want to own most of those activities? And to what extent will they partner with other stakeholders? Next, on CBDC remuneration, limits, and features, how will the CBDC overall system be managed? Will there be limits to how much people can own, or will there be remuneration through interest rates, etc.? Next, there's the role of the private sector. There are many different roles that the private sector can play. It's around managing the system, opening accounts, facilitating payments. And then it's not just what the private sector does, but who is included in that what. Do policymakers want to encourage the participation of non-traditional players? Do they actually want to bolster the existing financial services providers or make them more sovereign? A lot of questions to untangle there. Next, there's the question of privacy and what is the desired privacy approach for that specific jurisdiction. Privacy itself is a highly multifaceted concept, but essentially it's about who should have access to what information and defining what guardrails are critical to ensure. And then finally, there's many individual rights that live outside of just privacy. So what are protections, rights, and services that are most valued versus which ones are nice to have? And one thing that I will note, it is, very tempting to say that everything is important. We want the world through our CBDC system. There was another paper that I co-wrote last year with Doug Elliott that was focused on 6 policy mistakes to avoid when designing a CBDC. And one of the key things that we stress is that it is tempting to want to design a Swiss Army knife, so something that does everything. However, it's a really great tool with a lot of flexibility, but there's a reason that the market share for a Swiss Army knife is quite limited, because if you know what you want to do, that's not quite the tool that you buy.
Yeah, and I would just love to expand on this idea of the Swiss Army knife, right? Because we talk about these design principles, and they're really around understanding what you want your system to do, and they're not technical design principles, which will come in kind of later on our framework. And I think this is really an important distinction, because it helps you go back and check what your design doing what it was intended to do. So you can go through the process of designing your solution, making those technical choices, and then you go back and you look, did it achieve these? Did we end up where we thought we were? Because likely you'll have strayed at some point and ended up somewhere else on the spectrum, and you have to really decide, is that okay or is that not okay? And the technical limitations do require trade-offs, but the initial design technical choices should stem from these design principles first, right? So it should always start with the policy, lead to tech, and then potentially feed back into design again, but not start with the technology. And so, without these principles, I do think we'd end up with this Swiss Army knife of trying to do a little bit of everything and not doing anything well. And so this is why we feel it's so critical to think through each of these as we're leading into more of the solution design.
This is a great way to portray something that some of our guest speakers from previous CBDCs have named or have tagged as CBDCs are jurisdiction dependent. But you have gone a step further to say, well, it's not only jurisdiction dependent, but you have to get those dependencies straightforward. I mean, you have to have very well-defined design principles, so then you can have the decision on the technology that you want to use to deploy your CBDC. And this is really a very nice point to have here, because this is a better way to portray this problem. Not only that it's jurisdictional dependent, but it's also a matter of designing your policy aims first, technology second. And this is really great. And that's like my wrap up to your answer. Thank you, both of you. So let's go to the next question. It has to do with these policy trade-offs that you just mentioned. So when designing a CBDC, what are the 3 key policy trade-offs that we should, or that a central bank should be thinking of?
All right, so I think we can move. Yes, thank you. So we've already been talking about like how we build these trade-offs. Our goal with the paper was to hone in on the considerations at the intersection of policy and technology. So these trade-offs aren't meant to be comprehensive of all potential trade-offs, as much as discuss some of the key policy trade-offs that will make a big difference in how the technology is designed. So again, to Erica's point around like the technology following policy. And so what we highlight in these 3 trade-offs is that where you are in these spectrums, and again, these trade-offs aren't meant to be binary as much as represent a spectrum where there's multiple choices in between, will feed from the choices and the prioritization you made on that design principle phase. So to talk through each one of them. So first is around the level of central bank control. Should it be more centralized or distributed? This is about the extent to which the central bank wants to fully own operating the CBDC system, or share some of the operational burden and risk with a circle of trusted entities. Next, there's the level of individual autonomy. And this is about, does the public, so again, with that idea, jurisdiction specific, does the public and citizens prefer to have a system where individuals have more autonomy, but also more risk, versus having most of those issues solved by distributors or by the private sector, say recovery of key, etc. So this could mean delegating some of consumer protections to those private sector agents, as well as ensuring that perhaps they're able to provide some identity-based services, which will have a link to privacy. But then the final dimension is honing in on the privacy. Is it desirable to have the same level of privacy and anonymity as cash to be fully anonymous, or would you want the capability of providing centralized identity-based services? So this could be social benefits, taxes, a number of other things. And now I'll pass on to Erica to explain how these policy trade-offs then feed into technology decisions.
Sure, so if we can go to the next slide. So as Larissa mentioned, right, this is not a comprehensive list. And I just kind of want to dive a little bit into kind of how we got to these trade-offs and then link that back to our solution exploration. So we did start with a very large set actually of design type principles, policy trade-offs. And what we looked at is trying to figure out what technical solutions would impact the ability to achieve a particular spot on that spectrum. So in some cases, there was clear linkages where we could see, okay, this one technical decision, I'll just pick one off the top, right? Transaction processing could really impact the type of control and the type of and where you might end up along that spectrum. And in other cases, there wasn't that clear linkage. And so those are the ones that tended to basically not make it into the paper, right? They didn't really lie at that intersection. And then as we were going through the solutions and the technical decisions, and as I was and the AWS team was talking through kind of the implications, that kind of really turned on some light bulbs, right, on the policy side of, oh, well, that has an additional impact that we didn't think that connection was there. And so that's kind of how we ended up in this really nice, it took some coordinating, but really nice center of policy trade-off that existed between these design principles and the solution exploration. So we did end up with these 3 trade-offs that map over to 3 solution exploration areas. And so the first one is about system management, right? So who is going to run the actual system underneath? And this is, people love to talk about the ledger. This could include the core ledger, but it also includes everything that happens on top of that, right? So who is processing the transaction? Is it going to be distributed and handled by a set of intermediaries, or do we really want the central bank to be, or does the central bank really want to be processing every single individual transaction? And what would the implications of that be? Same for data storage. This links also down to privacy and identity management. So you'll see a lot of linkages between these. And so who has access to the data? Where is it stored? How long is it stored? Is it stored through the duration of just the transaction being processed? Is it persisted after that? Are there communication lines that exist outside the system along the lines of maybe a Swift messaging system that runs alongside the actual movement of funds? So there was a lot of thinking through how combinations of distributed versus centralized transaction processing, as well as data storage and management, really impacted where you were on this spectrum. And for wallet and account management, we were really thinking about that who should have the control, right? Because when you have control, you also have responsibility. So individual control would really give autonomy to the end users, but at the same time, they'd be responsible if funds were lost in some way. And so thinking through what that would imply for wallet type, right? Custodial versus non-custodial. And for those of you who aren't familiar with kind of those technical terms, custodial means that there is a trusted custodian who is moving funds on behalf of the end user, versus non-custodial, where the end user has complete ability to move the funds on their own. And so where do we want to put that responsibility and control? And when you're looking at what the central bank wants to manage, there's also a difference between account levels. So does the central bank want to manage just higher level intermediary accounts and let those intermediaries handle end user accounts? Or do they really, again, want to be able to see and manage the individual level? And if there is a decision to keep it at the more generally wholesale account, would there be reporting involved so that there is kind of a backup should something go wrong with an intermediary? At least the central bank has access to the data to restore access to funds. So really, again, this spectrum of how do we design account access and control to move between individual and distributor control. And then the last one is around identity management, which does fit into, again, that spectrum of being able to provide those individualized services, which does require the central bank to have access to that individual data. So we noticed that there was actually 2 are listed here. There's actually 3 forms of privacy. There's privacy from the central bank. There's privacy from the system, right? What will the system or the intermediary level hold, regardless of whether the central bank has access to that? And then there's actually kind of a third piece of do each of the intermediaries have access to each other's data? That one's a little more complicated. And so that didn't fit necessarily into our framework here. but really thinking through how do we store or link an individual's identity to their transactions in a way where privacy can be maintained at a particular level. So it could just be distribution of data against multiple actors, such that all of one person's information isn't accessible by one particular thing, but can be pieced together. Is it completely accessible in that identity and everything is linked and these very personalized individual services can be offered? Or is it completely the cache-like spectrum where additional anonymity is actually added into the system? So if you think about public blockchains, they're actually pseudonymous, right? So you don't have your real identity linked to your digital identity, but your digital identity does exist. And so actually moving all the way to the side of anonymity requires extra effort, which in our paper, we mentioned that the case of full anonymity is unlikely to be chosen within the CBDC realm. So, yeah.
That's great, Erica and Larissa. Thank you for this answer. I wouldn't be able to summarize your answers very well, but what I want to say is that it was you, I think, Erica, that you mentioned something, a word that I like to use a lot, complexity. And the things that this type of thinking about the solution exploration will have to do with a lot of complexity, because one solution that is trying to solve something is going to affect the solution what you're trying to solve somewhere else in the system. So it's very interesting and very important to have this like solution exploration very well documented, that very well thought truly, because the complexity of these interlinkages between each design option, it's really big. And it's very difficult for a central bank or a central banker or for a team designing a CBDC to come up with all the entire map of the complexity. So this is a very good start for them to think about how to provide a solution for each one of these principles, of those design principles, policy principles that we want to tackle. So thank you for this.
Sorry, if I could just follow up on that. The paper is already at 80 some pages, right? And so there was absolutely more areas, and as we kept going down all these rabbit holes because of that complexity, and there are things that we did have to intentionally leave out, otherwise it would have jumped to 100 and who knows how long. So we absolutely, the level of complexity is there, and if there's something that some of the readers feel is missing or we didn't address, it's likely because of that. Yeah. For sure.
I mean, it's a very complex topic, and I think that you managed very well to put the most important there. Obviously, there are things that were left out, but that's the whole point of complexity. You cannot put everything on a document. So thank you. The next question has to do with the privacy thing that you, Erica, already addressed. I don't know if you want to say something very short. If a central bank does decide to position themselves close to the identity-based services, what types of services do you envision those being?
Sure. So as I mentioned, privacy is really about access to data. So identity data, transaction data, the ability to link all that data together, creating networks of who's transacting with who. So there's a lot there, and there are definitely privacy concerns. But I have to say, in our conversations with central banks, more often than not, we run into less cultural opposition to central banks or a central entity having personal information, and we run more into citizens and users really demanding public services, highly effective, highly efficient public services. And so as we're thinking about how we could leverage this data, and there are privacy preserving techniques, so I'm not but those do exist. But as we think about access to this data, there's three that I can really think that align with policy goals. So we all have talked about financial inclusion, right? How can we leverage a CBDC system to make a more equitable financial system? And one of the ways that we could do this with access to this CBDC data is through creating equitable along the lines of credit risk scoring, right? So what is the risk to a financial institution in providing a service to this end user? And right now, a lot of our risk scoring methods are imperfect, right? So what access to this CBDC data can do is either create for the first time a financial digital footprint that a financial institution could leverage to properly and effectively assess the risk of providing solution of a financial service. And in addition to that, it can also ensure that consumer protections are in place, right? So yes, we want to increase access, but we also don't want to increase it so much that we end up on the other side and we have over indebtedness, as we've seen in some countries that have had those prolific microfinance and mobile money solutions. So it's really about using the information to balance access, but not too much access, right? And the third piece of that is that there's also access to macroeconomic data, right? So a lot of the reasons that financial services are not properly priced in emerging markets is that there's just not enough macroeconomic data to think through the overall risk of the market and price along that. And so with more data just about the viability and the flows within the market, it's hopefully will lead to a better assessment of risk in the market and thus more affordable services. So that's kind of the first piece around financial inclusion. The other goal is around economic stability, right? So again, along these lines of macro aggregate data, there's a much better chance to be able to look at the current trends and find earlier indicators of potential concern for the economy. And so this would hopefully allow a central bank to act sooner and potentially stay off a crisis earlier as it's developing. And it also provides a better feedback loop. So as they're taking action and implementing monetary policy, is it actually working the way they intended, right? So being able to actually monitor the effectiveness of their policy a little more accurately. And then the final piece is, of course, reducing fraud, reducing illicit activities. So that pattern identification can also indicate where there are troubling connections, troubling networks. And this is possible because in a more effective way, because before all of this data was kind of spread out across different financial institutions. And now having it all together, which yes, is a bit scary, it does allow that kind of greater view and parsing of what's happening to really help identify those potential rings of illicit activity. And so again, scary, data all in one place, but I really do think the benefits, if the data is handled properly, are really very big.
Thank you for this, Erika. I think there are several points that you highlighted, which are really interesting because I feel that sometimes we always fear about, as you mentioned, centralizing all the data on a single public institution that could be well managed or badly managed. But the advantages are also, sometimes are not very clear, and you just pinpointed several advantages that are really interesting. I love the one about the financial, I would say transactional footprint of the people to have like fair credit scoring and so on. I think that's really a really interesting one. And also the consumer protection about and also trying not to get the people over indebted, as we have seen in several financial inclusion projects in Africa, so, for instance. I think that's something very interesting. So I thank you for this. Let's go to the next one. So this one is directed to Larissa. You emphasize that the private sector has a key role in the design choices for CBDCs. What is the role of the private sector in this design of CBDCs?
So we really see the private sector as key collaborators in building a CBDC system. So many will have the technological expertise to help build, design, and manage a new digital currency, whether in partnership with the central bank or on an outsourced basis. But private firms also have ongoing connections to businesses and consumers that can help deliver CBDC services effectively and innovatively in response to market signal, just given their proximity to individuals. So in our paper, we call out one really critical role for the private sector that policymakers should attend to, as that will have a big impact on what the battlegrounds for competitive dynamics will be. And we wanted to make that conversation around intermediated versus non-intermediated a little bit more complex. What is the role? What are the different ways that it can be defined? So we call this the distributor. And this is the institution that is in direct contact with the parts of the system that the central bank manages. That's not the only role. There may be a multitude of payment service providers, but we wanted to hone in on the different dimensions that that specific role could have. On one end of the spectrum, that role can be quite expansive. So you could think of the distributor being something akin to a wholesale processor. So they would partner with the central bank and help process transactions, do batching of accounts, and really be embedded in system management. On the other end of the spectrum, you may have that role be very limited and basically function as a gateway. So it would be just an API that connects to a centrally managed system, with perhaps like the innovation taking place with competition amongst payment service providers on user interfaces. So how and where in that spectrum you are and how you define the distributor role will have a lot of consequences to barriers to entry. So how easy it is for different players to innovate and deliver services. It'll have consequences to the data ecosystem, since building on what Eric has been talking about on who has information to what data. It'll also define like what data monetization business models are allowed or even possible. Privileged access to data could limit competition, and you really want that right balance between privacy and the ability to provide services that individuals care about. And then finally, it has an impact on interoperability, because the private sector may be more versus less incentivized on ensuring that the system stays interoperable over time. Now, this is really complex, and how it impacts competition really depends on what competition looks like within the jurisdiction today. And we just try to tease out a few of those dimensions because the solution design could help encourage innovation. So it could do that by either empowering distributors or by creating the conditions for new services to emerge through open competition. So for example, one possible way of encouraging innovation could be that you give distributors a clear ownership stake in the core processing system. That would give them the incentives to ensure that the system adapts to meet the challenges of the demand. But it's not so easy that you can say like, oh yes, let's just do that. You kind of need to know the institutions that you're working with, because ownership stake could actually have the adverse effect, because it could enable distributors to make self-serving changes to core processing functions in a ways that actually create frictions for payment service providers. So it really depends on who is it that you're working with and what is the overall like governance architecture that you have within the country. All we want to do is highlight that the role of the distributor is key to understanding how competitive dynamics play out, and it can't be, it needs those consequences, all the key policy trade-offs need to be then thought out. Like, how is this likely to impact your innovative payment systems in your country?
That's great. I just have a follow-up question that perhaps we can do in the Q&A, but I think that the amount of work of this distributor, which is a key element in the CBDC environment, will determine how it will be compensated for its role, right?
Yes.
Because it's something that it has not been discussed enough, I think. I mean, I haven't seen anyone discussing how are we going to compensate the distributor. Is it going to be the data? Is it going to be something else? So perhaps let's keep this in mind for Q&A if we have some time.
Oh,
so
yes, it's already connected to some of the questions that are coming in.
Okay. Oh, yes, that's true. So the next one is also for Larissa. It's related to these design options. So it has to do with how to make CBDCs as attractive as possible for the public, but without threatening financial stability. And how could we test how these design options related to remuneration, for instance, limits, like balance limits, transactional limits, and other end features affect the adoption of the CBDC?
Yeah, so I think it's actually related to the question that you were talking about before. Like, what are the incentives for the overall system to grow, and what kind of limits do you have so that it doesn't grow too much. And so that balance between making it attractive without impairing financial stability is a really important one. And it's really about understanding the drivers of adoption, like what level of adoption is desirable, having a clear vision on that, and how those adoption levers may impact the system and how it interplays with competition, which is all of the complex things that we were just talking about. So what we recommend to policymakers a few different things. First, it's important to build scenarios. So that's the easiest way to anticipate and understand some of the potential dynamics and interlinkages. And you could do economic modeling, you could do agent-based simulations, leverage the great kind of work that FNA does, that foresight and thinking ahead around the spectrum of possibilities and wargaming, what these different scenarios may mean is really important. Next, it's important to work closely, both with the private sector. So that's to understand the business models, incentives, but also civil society to understand what is it that citizens want, what's missing in the current system, what forms the basis of trust, because it's easy to make assumptions, but it's important to really, really engage and not develop any system in a silo. It's doing surveys, consultations, focus groups, cross-sector discussions. It's really leveraging and growing with the constituents and stakeholders available in the public. And there's a bit more of a subtle point, which is that development and deployment phases are in and of themselves opportunities to experiment with different collaboration models and see and test your assumptions and how it works with the specific different actors that you're likely to work with. So it's more about like expecting to learn a lot throughout the process, make hypotheses and test and learn from stakeholders that you're working with.
That's great, Larissa. So I will summarize this very quickly. You will say policymakers to build scenarios, several methodologies, including the FNA solution that you mentioned. A second, like getting the opinion via surveys, poll conferences about what people is expecting about this type of solution. And in Europe, for instance, there are several surveys that have been conducted with the people and have given us a lot of information about what do they expect from a digital payment solution, even if it's from the central bank or not. And also to have, and the third one that you mentioned is to have the ability of adjusting after you have rolled out and learning about what is the adoption like and of the CBDC, and to try to understand how to adjust everything while it's moving, which is obviously a complex thing, but you should do it anyway. So thank you for this, Larissa. The next one to Erica, what about the choices around the ledger technologies? And this is a topic we always bring about, because there is always this discussion about, yeah, CBDC should be designed on top of DLT systems, but some people say, well, the central bank will never allow to have like a typical DLT, but a centralized one or a private DLT or something like that. What is your opinion about this?
So there's definitely a reason we left this in kind of its own separate box within the paper without diving deep. Everybody wants to talk about the ledger. So, as someone with blockchain in their title, I can actually say that more often than not, I am pushing back on the use of blockchain as opposed to being an advocate for it. There's a desire to use it where it may or may not be needed, right? But just like any other technical decision, right? Again, it's going to depend, right? So there are some basic technical requirements that need to be evaluated for whichever type of ledger, right? Is it secure? Is it resilient in case of cyber resilience, natural disaster resilience? Can it be, can it recover from an incident? And is it scalable, right? Can it keep up with the demand that might be happening? And that's all along with base performance. Can it provide the throughput and response time to really be the foundation of a real-time payment system, plus everything else that might be built on top of these CBDC rails? And so it depends, right, on the vision of the system and where the country is headed. So as we, think through the areas where you hear the debate about the ledger, even centralized versus decentralized in the ledger realm is also a spectrum, right? So when we think about distributed, right, ledger technology, you can have centralized systems on cloud, right, where you have all of this data existing distributed across a region, across a continent, right? So you can get aspects of, favorable aspects of blockchain or a DLT through centralized services. And similarly, you can take a system that would be, completely decentralized and keep portions of it that you want to stay that way and centralize other parts. So for instance, the idea of a consensus mechanism, right? Distributed approval, you can still do distributed approval and have, say, centralized transaction processing. And so one of the things that I'm noticing on the trend within DLT is that there's a lot of aspects of DLT that don't require to all be together, right? You can have the aspect of immutability without a complete blockchain in its original traditional sense. You can have distributed consensus mechanisms, again, apart. So what I'm seeing now in the idea of creating more tailored ledger solutions for a CBDC, as came out, in the Project Hamilton paper, as proposed by HKMA, as we're seeing in kind of the RLN alternatives to CBDC, you're seeing aspects of blockchain mixed with centralized technology. And I think that's likely what we'll end up, just like everything else. It's not going to be binary, it's going to be somewhere in the middle.
That's a nice answer. Thank you. So we can think of something in between. We still don't know which is the point in the spectrum that we're going. I mean, central banks are not going to to use, but I think that's perhaps a wise choice. I mean, not to go one way or another. So for Larissa, what are the main risks that can emerge with the implementation of a CBDC system?
Yeah, so I think it's important to think about risk across a few different dimensions. There's that element of the timing of the risk. So is it related to the program design versus ongoing risk to the system once it's implemented? There's an element of who is the subject to the risk, or is it individuals? Is it risk of the central banks, or is it risk to other stakeholders? And then there's the typical, for people coming from a financial institution background, there's a typical way of risk stripes of thinking about financial versus non-financial risk. So in the financial risk side of things, like central banks are quite worried about risk to their monetary policy. We talked a little bit about this around how that means for managing like your levels of adoption, what it might mean for economic stability, because there's risks of credit disintermediation if adoption is too high, and that's mostly managed with putting either limits or managing incentives for the CBDC remuneration through interest rates. And because of those interest rates, the possibility of managing interest rates and perhaps even going into negative interest rate category, for some people that represents a risk of financial repression, as people have different desires and tolerances for what kind of risk tools and they believe central banks should be accessing. But on the non-financial risk side, our framework and like our three policy dimensions actually help provide a bit of a way to think about those various risks. And this is going to be a bit of a simplification, but hopefully just to give, again, like a framework that may help point to different axes of how risks can either become more versus less severe or change, like who is bearing the risk. So on the system management trade-off, it's really about like central banks owning the risk because they're managing the system versus overseeing the risk because that risk is being shared with distributors. So the types of risks that are most salient across those dimensions are about data storage, processing. It's like the technology risk. It's risk related to like business continuity, operational resiliency, cybersecurity. That's a really, really big one. On the second dimension around like wallet and account management, so that spectrum kind of changes if the risk is being borne by the individual versus by the distributor. The types of risks that manifest themselves to different degrees are things like fraud and theft, who suffers the consequences or bears those risks. It's around custody and ownership. If you lose your keys, who's responsible for filling that gap? And to note, tech risks are also applicable, but just highlighting some that are sailing across those axes. And then when you think about the identity management axes, then it's really about user privacy, data protection. And then on the counterbalancing side, it's like, how are you thinking about who owns and manages, know your customer, and anti-financial crime types of risk. So that's the risks are many, and it's really important to think through who is bearing that risk and who is managing and making sure that there's appropriate safeguards in place, and the people bearing the risks are able to have the tools and means to minimize the adverse effect of those risks.
Thank you, Larissa. And I think that something that Erika mentioned a couple of answers ago has to do a lot with this consumer protection, because the people are those which are like that have less ability to measure and to measure and to address those risks. So consumer protection will be a key with CBDCs as with other financial products. So thank you, Larissa. Now we have the last question, and we are running a little bit out of time. We're going to consume like 1 or 2 minutes of the Q&A. And this is a very simple question. Well, simple, but complex at the same time, which is for each one of you, in your view, are we going to see a G7 central bank rolling out a CBDC in the next 5 years? Why?
So I'm curious what Larissa is going to say, because my answer is, yeah, I don't know. The world, the political financial landscape, advancement of technology is happening and changing so quickly that I think it's difficult to even predict tomorrow or the end of the year. What I do feel comfortable saying, though, is that we already have CBDCs in production. We have continued growth of cryptocurrencies despite recent hacks. I think with the right regulation in place, stablecoins will have real world use cases. And so central banks need to be prepared, right, for a future with both public and private digital currencies, whether within their jurisdiction or outside. And so CBDC is one way to respond to that. And if they feel that's the best way, then absolutely we'll see more of those being issued. But I also don't believe it's the only way. So I wouldn't be surprised if a new solution somewhere that's like a CBDC or near a CBDC would emerge.
Thank you, Larissa.
And I would agree with everything that Erika said. And we have no crystal balls. And again, 5 years goes by fast, especially when you think about design and full implementation. But just to give like a few bets, if you know, especially if you have a couple of years of leeway, I think digital euro will likely be there. UK is giving some positive indications that they're progressing and likely to go forward with their plans. There's not yet a political consensus in the US to move forward, but it's possible that within 10 years, the Fed decides to launch a digital dollar. They've made it clear that they're in no rush to be first. I'm very much on the lookout for the September Treasury CBDC report and what it has to say. So all of the other G7 countries are also considering. So I would say we'll likely see some others in the 7 to 10 years. So I'm betting on yes.
On yes, that's fine. We have this recorded. So we're now entering the Q&A space. So I'm going to give you one very simple question. Well, simple but complex once again, where I read all of them and decide which ones are we going to answer. So this one is, in your opinion, how should the remuneration of CBDCs be set? All
right, so we kind of, oh, Erika, did you want to take this first?
No, I was definitely going to hand to you.
Okay. So I think we've already touched on it, that there's 2 types of archetypes on how you manage and handle limiting the adverse effects. Is you can set limits to the quantity, or you can pay or use interest rates as themselves an incentive mechanism. So that's one way to think about the remuneration, is like the remunerations to the individual, and if you want to or not want to pay interest rates. And again, as you would notice from all of our answers, is that everything depends on your vision, depends on your design principles and like the specific context. But that's an important facet of remuneration, is how you want to think think of whether or not you remunerate individuals, but then another aspect of it that we've also touched upon is what remuneration in business models will be likely encouraged, allowed, permissible from the distributor and payment service providers front. And that in and of itself could be another full hour discussion. So I would just recognize that that's an important dimension with a lot of good thinking, where we're just at the beginning of understanding the full realm of options and potential trade-offs.
Thank you, Larissa. Erika, do you want to say anything about this? Okay, I have another one. Let me rephrase it a little bit. There are other trade-offs that haven't been mentioned in the paper. One of them is integrity versus financial inclusion. I guess integrity has to do with money laundering, AML, know your client, and so on and so forth. And the other one is financial stability neutrality, not too much and not too little use of CBDCs. How would these trade-offs impact functionalities and incentives at the solution level? So perhaps let's try the integrity versus financial inclusion.
So I think the way that we had thought about it, and we didn't call it out as a trade-off specifically, is because that's a little bit more around where, what is your prioritization? And like, which one are you more likely, how do you think around like the relative importance of financial inclusion and the tools that you want to enable in your system? So it's going to impact like the individual reliance versus distributor reliance spectrum, as well as like how you think about anonymity versus ability to provide centralized identity services. Like, it's possible that those two are not actually a trade-off, but you want to ensure that you provide a significant amount of financial services based on identity, which actually would facilitate also the use of tools to minimize KYC and AML. So those don't necessarily need to be in tension. I would say it's more like around integrity versus like privacy.
Good, thank you. Erika, anything?
I'll just add that in the paper, we do talk a little bit about sometimes having a dual function system that can handle a population that doesn't have identity versus one that does. And there are ways to put limits and controls around those that are around that are offered to individuals without the digital identity. And so there is a way to hopefully not necessarily choose, but design a way to move from one to another, from one that might be more anonymous just because identity isn't there, to one that can really provide the expansive consumer protection and services.
Thank you, Erika. Next one, do we have the appropriate legal process set up to handle the risk mitigation?
So that was deliberately something that was called out as very important and outside of the scope of our paper.
Okay.
So the legal setup will really be, that's one of the things that is going to be the most context dependent, because every single country has its own systems, laws, and the way that it's evolved and the flexibility that it even has to adjust laws and regulation. So it is absolutely a fundamental piece of work stream to understand how the legal system either complements, supports, or is perhaps in tension with your different design principles. So agree that it is critical, but was unfortunately outside of the scope.
That's good. So let's have the last one, which is when compared to commercial bank money already available on smartphones and cards, what do you think will be the big user experience difference for people?
So, as we were thinking through bridging the gap between tech and policy, the other leg of that triangle that I think we really need is user, right? What did the user need? How do we create a true value proposition so that adoption is kind of natural, in that there is something of value that they want to leverage? So I think that's still kind of a research area that really needs additional focus. But when I'm just thinking about kind of the underlying fundamentals, the idea of a CBDC is to create a more efficient system. And so the idea of efficiency is linked to the idea of price reduction. And then linking that again to, what we refer to as the identity-based services, I think that's where we get a little bit of that user value proposition, and that we can provide, or the central bank could provide, really tailored services depending on, the citizen's need, in combination with it being more cost effective to provide.
So I think we're on top of the hour. So Larissa, Erica, thank you very much. It has been a very joyful, very interesting conversation. So I would like to thank you for being with us here, and I expect to invite you in some months once again, perhaps to talk about some CBDC rollout or some other new questions that have been raised because of CBDCs. So I want to thank you both once again. I want to thank all the attendants to this broadcast, and I would like to tell you that in the linkages that we have here in the last slide, you can contact us if you have any questions, if you want to reach one of the speakers of today's broadcast or previous broadcast. Also, you can get the access to the previous broadcasts in that link. And obviously, I'm going to invite you to the next FMI broadcast, the number 4 of them, in which we're going to have Nomos Digital and DGT Solutions to talk about cross-border solutions. And on August 31st, we're going to have the FNA Subtech Technology Showcase. So thank you very much, everyone attending, and have a nice day, all of you.
Thank you.
Thank you.
Thank you, Larissa. Thank you, Erica.